Hi, welcome to the Easy Trader Update. This is Kim speaking on Tuesday the 23rd of July. Okay, before I get into looking at the markets and where they may be heading this week, I just wanted to go over something which was particularly relevant. It is particularly relevant throughout the summer period, and it all sits about how to trade through the summer period. Now, I covered off a section on this a week or two ago, but I'm not finished. I've got more to say, and it was really watching the cricket highlights over the weekend when I had the rare opportunity to sit there and watch them. I noticed that there's a real good comparison of an excellent batsman and an excellent trader. Now, if you've ever watched cricket, whether you watch one day cricket, whatever a cricket is, the basic principle is the bowler bowls the cricket, the batsman hits the ball or decides whether to hit the ball, and if he can, he'll hit the skin off it and he'll knock it for a 6 or a 4, or get as many runs as possible. That's the basic principle behind it. Now, if you can put that to the market, so the market deals us what's going on. As a trader, we look at what's going on and we decide on whether we're going to take a trade or not. There'll be certain things that we like, and just as the batsman will not hit every single ball, unless, of course, every single ball of that over is particularly good, he may only choose to hit one. So there may be 6 opportunities from each bowler. He only actually decides to hit 1 or 2 from that over. Just as with the setups that we have, there may be only 1 or 2 setups that we take out of all of what's there. But why does the batsman take those particular balls? Is because they are the best. They are set up as he likes them. They're effectively a bad bowl in a lot of cases, but it's as he likes them. It meets his criteria. Just as a trader wants to see a setup, a good trader, the top traders are wanting to see an absolute good setup. And if he set up well, you'll get an iffy result. I mean, this little statement here, it's not always the trades that you take that makes the difference. It's also the ones that you do not take that makes the difference. In other words, when you've got that iffy trade coming up, and just because it's the summer and the periods of consolidation seem often a little bit higher, the volatility drops a little quite often. The thing is to want to take everything that's bowled to you effectively. But as a trader, you've got to be that batsman, that top batsman effectively, and only choose the ones that fit with your criteria. There may be criterion, or whatever you like to call it, which makes the setup worthwhile in a high probability trade, in which case, great, it may differ fractionally, but there's always rules and slight rules to be broken. However, in the main, you're looking for a strategy that the key components of your strategy to be met, and if they're met, you take the trade. If they're not, you leave it. And it's important that just because it's a little bit quieter and the bowling's a little bit difficult, you've got the off spinners or whatever they are on, you just got to be a little bit more choosy, which means out of every 6 hours you trade, you may only get 1 trade. Every 6 weeks you trade, you may only get one week of trading, or one trade during the 6 weeks, or 1 good week. But if that's all that the market's giving you, that's all you can take. And it's really out of 5 days here, so we're being bowled 5 days of trading. We take the decisions as we see them. If there's opportunities to be had, as there was this morning, there were some good opportunities in the markets, and there was opportunities to be taken. Personally, I took 1 trade this morning, but it was a winning trade. It eventually did what it said it would do and came down and hit the levels I was expecting it to hit, and it was a profitable trade. But I've sat there for a long time not taking any trades, and there's other potential trades there, but they didn't quite meet the criteria, so I left them. Fortunately, I left them because some of them actually just drifted off. Some of them would have been instant losers. So it is being absolutely decisive, picking the ones that you're taking. That doesn't mean to say get picky with your strategy. If the strategy is all completely set up there, unless there's something very, very obvious, like a new story of non-farm payrolls is just about to come out 2 minutes after the setup's occurring, okay, you may trade that differently. But in the main, don't just leave them because you get scared of trading them. keep on trade the setups as they meet the criteria. However, don't trade the ones that don't meet the criteria. Leave them, and that's what makes the real difference between becoming a trader and a profitable trader. Okay, let's have a look at the markets. So, looking at the pound dollar, what we got here at the moment, well, I've been on about it for a long time, it seems. Quite a few updates about the monthly pivot being above us. There was an opportunity for it to run up there, and eventually yesterday it got there. Oh, joy. But now what next? Well, looking at the markets, we've held around now. I was expecting pretty much an inside day today after yesterday's relatively big ranging day. So I wouldn't be shocked if we see or remain within the range of yesterday's bar. However, we could of course break out at some point during the afternoon and just run up a little bit further. That's fine. That'll at least give me a signal to the probable continuation tomorrow. If it puts in a bearish looking doji, if we break the bottom of the lows, today's lows, well, I would expect a bit more of a continuation to the downside for perhaps a day or so. But there is some key support below us. I mean, of course, we've got the 50 MA that's just not far below us. To pull straight back to it, well, I'd rather do it in a day or two. So there's the daily 50, the daily 100. So there's some support areas from that point of view. If you look on the 4 hourly, I mean, this is for the next day or two to consider. We've got the 50 MA. Let me just bring in a pen here. We've got the 50 MA just here and the 100 MA here. Now the 50 has been hit a couple of times, so I'm more inclined to look at the potential for it to come back to the 100 MA. There are also 2 Fibonacci levels around that area that I've looked at, which could tie in quite nicely for a retrace to this sort of area if it occurs. So there is, as I say, potential there. Now, if we are to break the monthly pivot, well, immediately we get into slightly more bullish territory. The theory behind pivots, if you're above the main pivot, well, you're in more bullish territory. If you're below the main pivot, well, you're slightly more negative territory. That's not to say, of course, the market won't move upwards as it has done here, but obviously it needs to move above and get above there in the first place. Now, if it does, well, there's not a lot in our way, and cable could actually run up over the next few days quite a bit in terms of there's the next sort of point of key resistance. Just looking at this chart here, maybe around the R1 pivot, so around about 155.92 with that 200. Okay, it's been tested before, but the combination up here may give us some resistance. Of course, we could put some fibs on there and just have a quick measure to where we could be running at. Okay, we run into the 61.8 here, so if this pulls back, well, that's obviously that could bring us back lower, and the measurements I've looked at is around about a 23% return or 38% pullback on that. But if we can start moving up this way with the 786 at 155.45, it seems like a logical area, which is just short of that 200 and the R1 area there. So they're the sort of areas I'll be looking for the upside if it does run through this afternoon and head on for the next few days. With the euro, just running to look at the euro. Now, euro's been a little bit, I mean, it's been through its monthly pivot already, so it's already sitting in the slightly more bullish territory here. And we just on all of these currencies at the moment, we're hearing more sort of knocking of the US currencies, and the more, so I say, iffy news and a real backtrack in terms of the winding down procedures. So I would imagine we've got much more potential, or I say much more potential, but good potential to continue up into this monthly R1, or even head up towards the double tops here. Any retracement, well, we've seen quite a retracement here already. We pulled up, we retraced quite significantly, and there's a reasonable chance of, as I say, a continuation. If we do just a quick Fibonacci continuation here, a 1-to-1 move really brings us pretty equal to or just above the previous highs. I think at those previous highs we'll see some resistance. We're just at around about the 50% level at the moment, so again it'll be interesting to see how we finish today off, and if we can break through yesterday's highs, well, we could end up running towards the 618 extension, etc., and maybe the 1-to-1 move at some point as we run through the month, certainly towards the R1 pivot. Okay, looking then at a quick look at the yen. Yen is in a much more consolidated patch. It still hasn't come down and hit the monthly. I mean, it started getting a bit stronger, and we keep on seeing this. It sort of gets a bit stronger, has a retrace, but we could be heading further south now, get a bit more yen strength in there. But the yen itself, I mean, with the elections, etc., probably hasn't helped things massively. A bit of indecision, etc. So it's stayed a lot flatter, effectively. It's really now a case of where it can come down and meet my stats and hit this monthly pivot. At the moment, I mean, it's put a pivot swing in today. It's triggered the trade, or triggered the trade of it, but it's triggered the pivot swing, and it looks like it could want to head further south towards the 100 MA and maybe the monthly pivot at some point. A break of the highs, of course, will then see us looking for a continuation to the upside, effectively. We've got a couple of scenarios here. We've got this scenario here where we head south, or the continuation to the upside potential, where we've already done this wave here, pulled back, and maybe looking to head here. So it's really a case of looking at the certainly the high from a couple of days ago as a key, the Friday's high there, and looking at more recent lows and see if we can take those out. We take those lows out, as I say, the 50 and the monthly pivot looks like a reasonable chance. Euro yen is a similar picture in a sense, although the euro, being a little bit stronger, has pushed it, and it's gone up with it. It's already hit the monthly pivot, so it's running really back into these prior highs here. It's really whether it can continue up this way at the moment, but and continue to the upside. The euro is certainly stronger than the yen in this point of view. Of the currencies, the yen seems to be tad towards the weakest at the moment, followed by the dollar's not too far behind, hence the dollar yen not really going anywhere. Then perhaps the euro and the cable. I mean, from the monthly point of view, you'd say euro is certainly the strongest in terms of its retrace here, and then, as I say, cable. So there we go, quick update. I hope you give consideration to your trades and choosing the best ones, and letting some of the less best ones buy, and stick to the safety. Okay, great trading. Be back later in the week. Bye for now.